the way I'm going to frame the presentation is just to give you a sense of what are the increasing number of drivers that are pushing companies to disclose and report on a variety and expanding breadth of subject matter that get translated or not into indicators. Then really give you a sense of what does a good corporate report look like? What are some of the basic principles in terms of putting together the story, the strategy that falls into a corporate report? Then give you an overview of the best reports that have been produced across Canada, and not specifically in terms of going through a report from start to finish, but really give you a sense around some of the key principles of what constitutes a very good corporate report. What are some best practices that we have seen? And we've seen those because every year we chair the CIC Awards on Sustainable Development Reporting. It's an award program that's gone on for close to 10 years. We are the chair of that award, and we partner with IISD in the actual assessment of the report, as well as the CICA. So just giving you a sense of what's really happening in the Canadian landscape. And then I just have one slide at the end of really, again, positioning where does sustainability reporting really fit into the development of sustainability strategy? Because that is often what gets forgotten. People, corporations too often focus on the production of a report and forget that there's, in fact, the report is only as good as the underlying factual information and strategy that's behind it. And often, surprisingly, the two often really don't meet. So in terms of drivers of change, and Dan mentioned some in terms of, that's really out there in terms of a regulatory context. But from a corporate perspective, key issues that have been really driving change over the course of the last few years have been customers and customer demand and preference for this type of product versus another. Investors and creditors, and I'll show you a couple of key trends on that, certainly through shareholders' resolutions, proxy notices, and in fact its inability of having non-governmental associations participate in this process, because as you might suspect, a lot of NGOs just need to buy a few shares. They can actually then get involved and get specifically linked to the proxy statement and the shareholders resolution. So that's actually a very powerful mechanism. Rating agencies drive corporations. People like to be on the Dow Jones Sustainability Index. They like to be positioning their corporation in this regard. That drives action. Employees, the youth of today are asking more and more, what types of policy programs do you want to, do you have in place in terms of a key area in terms of recruiting the best and the brightest is significantly of interest of corporations. Communities and NGOs, again, the drivers of change. If you are in the mining sector and you're not paying attention to NGOs and communities, you'll have a significant surprise. It's in fact overcome the regulatory context in terms of environmental discharge. A large number of our clients may have all of the environmental programs in place. They actually comply. Their new mining operation complies with the local environmental laws and regulations, but in fact it's the communities and the NGO pressure that in fact either prevents or delays those operations from coming into play. So again, the drivers of change and that landscape is changing significantly. So when it comes to both opportunities and threats and how does a corporation react to that, they need to really understand and report and disclose on a number of parameters to meet the landscape that's just listed above. So reporting on environmental or economic indicators may not in fact meet the needs of an expanding base of stakeholders that's listed there and is creating and asking for a significant amount of information. So demands are increasing. I've mentioned, and some of these were mentioned as well, in terms of the Carbon Disclosure Project, an increasing number of indices that are there, and the principles for responsible investment. It's interesting, we all like to talk about the Carbon Disclosure Project, but every time, and Deloitte is a sponsor of that, but every time that we launch the next wave of results from the Carbon Disclosure Project, the quality of responses that were coming into play, very few of the 475 institutional investors are in the group. So yes, they sign on and they're a signatory and so forth, but how many of them are really taking that information, using it, and making more informed decisions? It's really a handful of those of institutional investors. So yes, we are engaging institutional investors, but not many are actually going beyond it and taking further responsibility or use of this information. So that's two pictures here. It's just the increase of shareholders' resolutions that we have seen. So you can easily track this. These are actually two very good websites to just track what is happening in terms of shareholders' resolutions. What are the topics at hand? What are the resolutions about? Because that's actually a very good indication of trending performance. In some organizations, in terms of the investor relations group or corporate groups, they just track shareholders' resolutions in terms of getting the pulse of issues. So of the 380 shareholders' resolutions, and that's of the entire set of proposals in North America in 2009, over half were related to sustainability and governance topics. One of the large governance topics that you can expect would really be around executive compensation. It was a very significant one. It continues to be very much top of mind for companies. But when you sort of look at corporate governance, that was pretty much executive comp. Environmental finance, human rights and workers, they're a very efficient and effective mechanism to stimulate and get change with respect to organizations. What's also interesting here is withdrawn by sponsor. It's very important to track because, in fact, it's really part of engagement. So as you're filing a shareholders resolution, you first speak to the company at hand because you want to create some action. And if you do, and you get some resolution as to how they're going to be responding to your request, if it's participation in the carbon disclosure project, if it's producing corporate responsibility reporting, if the company agrees to do so, then in fact that shareholder resolution gets withdrawn. So it's important to also track both of those in terms of stimulating action. The one that you can see here is really just a focus on climate change. So really ethical funds every year shows what's their proxy statement, what are they going to be targeting, and which companies are going to be targeting. So again, if you're interested, that information is available. It's really around making sure that that's transparent. Two very recent issues that's really driving reporting and embedding it in terms of the financial statements has been with the Ontario Securities Commission and the Securities Commission in the U.S. have done in terms of looking at clarification of disclosure expectations. So in December of 2009, the OSC issued a specific notice, it's called Notice 5177, which really communicates a plan to do two things to enhance compliance by reporting issuers with corporate governance and environmental disclosure requirements. So the Ontario Securities Commission was asked to really look at did the Ontario Securities Commission need to play a further role in enhancing the level of environmental and social and governance information with the reporting issuers that are listed on the Toronto Stock Exchange. After quite a good level of consultation that the OSC had done, they actually concluded that the existing mechanisms that are in place today in the financial mechanism, whether it be the annual report, the annual information of the AIF, the MD&A, these mechanisms, in fact, when you sort of read through what they're supposed to be talking about in terms of risk, in terms of opportunities and so forth, that the mechanism is there. It's just that companies are not, don't know how to interpret that and then ultimately disclose the environmental, social, and governance information. So they're going to be doing two things. They're going to be doing a full review, so they call it a special exam. So they're going to be choosing a number of companies across that are listed on the Toronto Stock Exchange, really looking how are they really in compliance with existing environmental disclosure requirements. They are focusing on the environment at this point. And then also by December of this year, they're going to be issuing specific guidance, so helping the Canadian issuers to better understand what are the expectations around environmental and climate change disclosure, and what should they, as the OSC, be expecting to see in terms of better discussion around risks and liabilities that exist with respect to climate change and the environment. This falls very closely on what this Securities Exchange Commission in the U.S. has done too. So they have gone further than the OSC. They've issued a notice that says for SEC registrants, so if you're going to be having your company listed on this exchange, you need to, moving forward, you need to look at addressing 4 topics with respect to climate change matters in terms of providing, when you're providing your funds. So they need to now have a point where they would discuss impacts of existing potential litigation or regulation, the effects of international accords and treaties related to climate change, actual and potential, and so this is important, indirect consequences of climate change related regulations or business trends. So for example, reduced demand for your high intense GHG producing products, or high demand for products with lower GHG. How would that actually impact your operational model? And lastly, the actual and potential impacts of physical effects of climate change. So they have now gone forth, and our sense is that the IISD will do something similar. They will then break out, when you need to discuss and disclose about climate change, here's some existing guidance, and here's what we would expect in terms of a more fulsome discussion. So again, this is the financial market, the regulatory market in the financial community that's shaping disclosure, that's perhaps providing some greater guidance beyond regulation. So these companies are not doing it because they're regulated, they're doing it because they're regulated by a specific component of the financial markets. So what is really quality reporting? I think it's important for each company, when they're thinking about what is quality reporting, to really have a discussion on quality reporting on what. So first, a company really needs to define and internalize what does sustainability really mean to their organization. So if it really means a broader suite, is it in what we heard environmental sustainability, more around the environmental footprint, or are they really looking at a very broad definition of sustainability, really including broad governance practices and reporting, their customer partnerships, product stewardship, broad range of employee practices, impacts on communities, sustainable ethical sourcing. So the first thing that you really need to think about is how have we chosen to define it within our organization? Because once you've done that, then based on that, you would then develop a strategy around it, you develop a governance structure, you develop policies, programs, and you would then start to talk about what that really looks like through one vehicle, which happens to be called a sustainability report. There are a number of vehicles that are out there. This is just one of them. So what really makes a quality report? We sort of framed it up by a number of key specific areas. So in terms of ensure that you actually communicate effectively. You identify the relevance of that report to the number of stakeholders. Who are you really writing it for? That you've demonstrated through the report a commitment to management and quality. You address a sustainable development agenda. You quantify performance, and you achieve credibility. But remembering that you have really two sides, and not forget that you've got the report user and you've got the report provider. So making sure that you really link those two pieces of the coin together, because otherwise you're going to miss one point. You're going to be having a very myopic focus to developing your report. You're going to spend an awful lot of money on it. You're going to pull thousands of indicators because they just happen to be very easy to have, but really nobody really cares. So it's making sure that you join the two parts of the coin. Another good basis is making sure, and we call it the red thread of the report, but making sure that it really hangs together. It's like a good novel. You've got to have a start, you've got to have a closure, but you have to, somebody who's going to read that report needs to really follow through what was the key messaging across the report. Is it just happen to be a jumble of tons of initiatives that happen to fall into each of those specific areas? Or was there actually a meaning with respect to that sustainability report? Some organizations actually develop a bit of a 5-year plan. They'll say, our 5 material issues for our company might be water, climate change, investment in clean technology, or whatever they might be. And they may set up a horizon saying, because these issues are so large, we're going to start this year with focusing on this subject matter. And then we might go on to the next one. So again, different companies are really looking at the communication and the sharing of information in a different way. So making sure that it really hangs together. So, what's the corporate context? How did I inform that corporate context through stakeholders and relevant issues? Am I really talking about the right things? my management commitment and strategy based on the corporate context, and also making sure that it resonates with my corporate strategy, my growth strategy, what's the plan for this organization anyway, making sure that those tie together. Demonstrate how you've actually created value, so that the notion of protection of value in terms of risk management, but also creation of value in terms of what new opportunities have you been able to identify through the lens of sustainability. And then really with targets and indicators that support all of this. So how are you really holding yourself accountable through setting of goals, targets, and then a commitment to report back on that. So this is really ultimately what we would be looking for. And then this is, this will be shared with you, but this is just, how do we really define each of those specific areas? There's a key number of sub-bullet points that help understand what is behind each of these specific areas. So key reporting trends. Some of the key leading practices, they're listed here. But one key thing is really this whole notion of extendable business reporting language. So these reports get cross-referenced, so they become, the real way that is create your own report. How do you quickly migrate from a sustainability report to the annual report, to the website, so that people are brought in seamlessly across the information that's being shared. Materiality matrix, and we talked about really understanding what are the concerns for stakeholders and what are really the impact on the actual organization. And so mapping the two and demonstrating, if you've chosen to talk about specific issues in your report, what's the evidence for that? How is that informed? And the use of materiality matrices, we're starting to see more and more. This was one that we actually used for our report. So it was very helpful just to really also get a sense what's the commonality of issues across stakeholders. CR governance diagrams, and well, I'll give you examples of that. And then GRI reference tables. GRI, certainly we have seen the structure of choice in terms of the Global Reporting Initiative, a stakeholder review report. And then really what I'm going to just give you a sense of is this context-based reporting. As leading practice, we have not seen much of this really happening. So I'll just give you a sense of what that really looks like. So if you really look at company reporting on water as an example. So this is performance reporting with context missing. This is typically what we would see in terms of reporting. You would see level of water use, and if you look at this picture from 2001 all the way to 2003, 2004, the numbers are going down. That's like a really great picture. You may also have, intensity measures and so forth. Context reporting really says, if this is, I don't want to pick on mining, but this is mining company A operating in Australia or operating in Tanzania. The issue of water availability is a big issue. So that's great that you're improving, but what's the context in terms of what's the available water supply? So if you're operating beyond the actual margin of what would be applicable, or just giving a sense that water issues it is an issue in the area that I'm operating in. How can I really look at the demonstration of I'm doing well, but in fact I really could do better. So it's the broader context-based reporting. We think that this is going to be asked for in greater demand. I would say the issue is just there's very few companies that are doing it, and one of the reasons they're doing it is they're having trouble with it is really how do you frame the context? How do you get information on that? So I think it's a challenge that really needs to be informed. So some of the best practices that we've seen from reporting. So first, in terms of weaknesses. So really, the whole notion of core integration with the corporate agenda. We have the corporate agenda. We review sustainability. We review the annual report and really look at what is the corporate agenda there, and then we compare it to what was stated as a corporate agenda in the sustainability report. And we really look for commonalities, and I would say the most that we see is actually an absence of that. So it's a lack of integration. So this is again giving you a sense that the sustainability efforts is really just it is not connected to the extent that it could be in terms of driving, shaping, or being more informing the corporate agenda. Omission of material issues raised elsewhere. So you might raise an issue as a risk in your annual report or your MD&A, but you position it very differently in terms of your corporate responsibility report. That's something also that the Ontario Securities Commission is looking for. So if you position climate change in a very positive way in your corporate responsibility report, but you framed it as high risk in your annual report or your MD&A, the OSC does not take a favorable view on that. They actually view it in terms of it's really not disclosure in terms of framed as continuous disclosure. And then issue in terms of failure to address sector-specific issues. So in a specific sector, if you're in a consumer business or if you are in oil and gas and you've not talked about specific topics, that would be remiss because in fact all your peers are addressing key material issues. So what does work? So and here I have a few slides just to give you a sense of really good examples of good reports. So in terms of clarity of communication, so really using tables and charts in a way that actually conveys a clear picture in a very simple way. So really, think about something that's really reader friendly, a logical flow, simple tools. So again, the ability of navigating that. A lot of them have hyperlinks, so you from that specific issue table, you can then go immediately into the report. Really looking at contextualized information. So thinking about how do you actually, what is the historical performance, not just a one snapshot. How do you perform against your sector? So providing information where it's available in terms of the performance of the broader sector, so that you put, again, it's a bit linked to contextual reporting, so you're putting your performance in the broader context of how your peers are performing in that area. And then really looking at drilling down indicators for business operation, because in many cases, if you present it at a corporate view, if you happen to be in a local area, you don't really care about the corporate view. You really care about what's really happening in my local space. So again, some best practices are here, and we just listed a couple of companies that demonstrate that. Valerie, just a 2-minute check. 2 minutes left. Okay. So you'll be reading a lot of these on your at home on your computer because I have a few more slides. But again, so here's just in different ways the different organizations, Potash and others, have used to very easily share a lot of information in terms of their corporate report. Scope and integrity of data clearly defined. So things that are very important is, again, what's included in your report and what's not included in your report. So scope limitation is very important, and also why is it excluded. So it's not enough to say that it's been excluded, but what's the rationale and reason. And in fact, that's really what's needed. I think readers understand. I just, if you look at the Petrocan and Suncor merger, people need to understand. We've just merged. We're not sharing data on this because we don't have it yet. So, and then we're going to be committing to doing it later. So that's really what we'd be looking for to do as practice. Materiality is a specific key point, and also the whole notion of area under control and areas that you might really influence. So just a few examples of those would be listed here. Very clear. This is BBVA, a global group. It was very easy to see exactly how they're organized and how their whole area of influence across the world. Transparent and balanced disclosure. So what's really key is making sure that, again, you contextualize it. You have industry benchmarking. So examples of that would be, here's how we're doing, and here's ultimately the overall sector. So again, really highlighting not only the really good things, but also the key disappointments. So things that went wrong, things that you're setting targets, you're not meeting them. Why are you not meeting them? Formal external review process. Again, really looking at extending, enhancing credibility, looking at unbiased disclosure, and that's really a key area. We have Mr. We have David Bell, who's also on this specific panel. So you could do it a number of ways, but really also having an advisory group on that is helpful in terms of external reviews. You can look at third-party verification of your information and your data, which is happening more and more, significantly a trend that's coming from Europe. Web-based disclosure, and again, in terms of today people want to build their own reports. That's really the whole notion of personalizing something, so they want to be able to look at a report in a way that's meaningful to them. And again, some key examples. Potash is one of the best examples that you might see there and seamlessly go between a number of different layers. And so within one or two clicks, you can actually get to the information that you need.